introduction if you don't mind.
All right. All right.
But good
Well,
morning. Thank you.
I know I missed you. Are you feeling okay? I heard you were doing not so great and sick.
Yeah, I'm hanging in there.
Yeah. Well, okay. If you need anything, you let us know.
I will. Thank you.
Okay. All right. Well, Mike's here today. He is a financial guru, probably runs circles around myself, wrote a book, and is going to share some awesome strategies with you guys today. Do you need to share screen or anything? You should have permissions.
I do. I'm just doing that right now. I think. Let me
Okay.
know if you guys
Awesome.
see that.
Yep. Well, no. There it goes. All right. You're good.
There it is. All right. So I don't typically like I said, use Zoom. So I'm just gonna keep it more on the outside so I can see everyone and not get blinded by the screen itself. So if you guys want to take a second, all you that are on here, pull out your phones and screen grab this QR code. This will take you directly to our link tree, which has a direct link to a way to set up a meeting with us. Anytime I do a presentation like this, especially 6 in the morning, the fact that you guys are on here with me, I'm giving you guys a nice little 20-minute free consultation. This can be literally over anything you guys want to talk about, whether it be setting up an LLC, whether it be your personal situations on the tax side. Really my goal, I guess, in essence, my sales pitch to some extent would be doing this presentation for you guys over the next hour and showing you how much value I can bring as being an asset on your team. So that's my sales pitch, is this whole presentation. By the end of it, I want you guys to walk away and feel like you learned something that you can take away and actually implement today. And again, see why we are, again, working with real estate agents all across the country and why we're the go-to financial advocates. So that's my sales pitch, this whole presentation. I'll tell you a little bit about who we are, who I am, and then we'll dive into the meat and the bones, which is 100 deductions for real estate agents. Okay. So
Awesome.
if you guys haven't yet, please take out your phones, scan this. I'll also put it back up here at the end of the presentation too. Once you guys see what we got. So
I already sent it to 2 agents because I know they've been asking for help, and I do this too, but I don't want to anymore. So I've been handing people off. So this is perfect for me.
Heck yeah. Well, I like it. Well, I appreciate that. And yeah, I'm excited. So let's dive in. So again, my name is Mike Ross, one of the co-owners of Northwest Premier Creative Financial Solutions. And our mission is to be the go-to trusted financial advocates for real estate agents all across the country. So currently we're in 17 states, or I think 18 states now. We service over 200 clients. We have 10 employees on our team, 10 amazing bookkeepers. So yeah, our job is really just to be an advocate for you guys through and through. We do that within our 3 main departments that we have at our company, which is business planning, financial consulting, and bookkeeping. So I'll just breeze over these real quick. The business planning sector, we have 2 sayings over there. We say, if you fail to plan, you plan to fail. And if you aim at nothing, you're going to hit it every single time. Okay. So you need to have clear and concise idea of where you're going in the business. And you can only do that with knowing your numbers. So we'll talk about that too. And then there's financial consulting, and that's actually what the company was founded on. So my business partner and I, this is where we really sit in the center hub of our clients' financial world. And we bring all of your guys as advisors, whether it be virtually or sometimes physically, into the same room to make sure everyone's working on your behalf, so you know exactly what you have, why you have it, and if it's in alignment with what you actually want. Too often nowadays, people get information from everywhere, right? You guys get information from social media, your team lead. Mickey might tell you what she's doing, but it may not pertain to what you're doing. You might hear something from your CPA, from your bookkeeper, from your attorney, whatever, but everyone's giving you information. But no one actually knows your specific situation all the time. So it's hard to really take what their feedback and figure out what works best for you. So an easy example of this would be if you go to your CPA right now, because if you don't know, taxes are due in 5 days. So if you haven't got your extension done, I would do that. So we can work together and make sure you don't have to pay that huge tax bill. But if you go to your CPA, is it fair to say that their main job is to lower your taxable income, right? By finding as many deductions or writing off as many things as they can, or using all the depreciation. But their main job is to lower your income, ultimately lowering your tax bill. However, what happens if you go to your CPA here in the next few days and they lower your tax bill because they lowered your income, but then next month you find the greatest investment property you want to go into? But the problem is the mortgage broker is going to say, hey, guess what? You don't qualify because you don't show enough income. That sucks, right? So your mortgage broker, right? So your
It's,
mortgage
it's the
broker-
worst for independent contractor because you're damned if you do and damned if you don't. You write everything off because you want to pay the IRS, but then all you can afford is a Cracker Jack house instead of what you can actually afford. It makes no sense.
Correct. Exactly. So that happens too often, right? But the problem is your CPA is not wrong. They're doing their job. And your mortgage broker is not wrong. They're doing their job. So you got two conflicting advisors, or two advisors telling you conflicting information, but they're both right. So again, so our job is really sitting in the center of our client's financial world, making sure everyone's on the same page and we're working for you on your behalf. Okay. Yeah. So those are our main departments. And then what we're most known for all across the United States, or at least in the 17 or 18 states that we're in currently. So at some point we're going to be in all 50 states, but what we're known for is our bookkeeping department. And within our bookkeeping department, we pride ourselves in three main areas. Number one is communication. We want to make sure we're always talking to our clients every single month. We're in the know. We know what's going on. We will reach out to you guys with some, some questions at the end to make sure we figured out exactly what kind of, expenses are going in and out if we're unsure on a couple things. We want to know if you guys' goals have changed in the months. If you guys are going on vacations, I want to know if you guys are leaving town so we can figure out how to deduct that vacation for you, which we'll go into today. But communications is something we really pride ourselves in. Our goal is to get back to our clients within 24 to 48 hours every single time, no matter what season it is or where we're at. And then the second area we really pride ourselves in is visibility. So numbers should mean more than just numbers to you guys. You guys shouldn't just be getting a profit and loss statement and just throwing it away, right? You should actually know what your numbers are. Numbers have to mean something to you. So what we do is every 15th of the month, we send you guys a profit and loss statement that should be in your inbox. And if it's not in your inbox, people need to call me because we want to make sure that's our promise to you, is that you're getting a profit and loss statement up to date every single month to make sure that you are in the know of your business so you can make real-time financial decisions each and every single month. And then the last part we're really proud about in our bookkeeping department and why people come to us more often than not is for the fact that we find missed opportunities. We are proactive bookkeepers. We're not reactive. You don't just send us stuff and we just type it in. No, we want to make sure we're hunting for things that you may not have thought about and asking questions all the time. So again, it's 6 a.m. I'm just going to go into the sales pitch here. The average real estate agent that we work with gets a 10% raise just from our creative tax strategies alone. So we're running a whole special all through April right now, where if I cannot, or my team and I cannot save you a minimum of $3,000 in taxes, if you're an S corporation, I will give you guys $100. That's how confident we are in working with our clients and working with people. If you come to us and you're an S corporation and I cannot save you a minimum of $3,000 in taxes, I will give you $100 on this Venmo you right then and there. That's our promotion all of April. So that's a little bit about us. Without further ado, let's dive into the meat of the presentation, what you guys are here for. 100 deductions for real estate agents. Oops. So first off, to give me a second to catch my breath, anyone who's on here, can you please unmute yourself and tell me what a tax deduction actually is?
I'm gonna let them go because it'd be cheating for me.
Yeah, anyone can unmute yourself. Could be my brother already.
Stacy, what do you think?
It's an expense that qualifies against income.
Yeah. Yeah, it's a business expense that goes against your income, right? So I could say the actual definition or just piggyback off what you just mentioned. However, this next video explains what a tax deduction is in a more fun way. So let me know if you guys can hear this. If you haven't, if you can't hear it, let me know because I'll stop it right away. Let me see. Oh, I got to do present view. There we go. Let's see. Let me know if this comes through. And go.
What's this?
Can you guys see that?
Expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the stores, so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but now I don't want to.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchase skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This, not a write-off.
Oh, well, the betting's non-refundable. So,
David, a write-off is a business expense used to reduce your taxable income.
okay. Well, then why isn't it called a tax write-off?
It is. It is. You can't just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
That's one of my favorite scenes of all time because
That's one of my favorite shows. I've been through the series, I think 4 times now. So
it's
I love
yeah,
that you picked that.
it,
That's awesome.
it beautifully illustrates what a tax deduction is. And honestly, I mean, I'm sure all of you guys have been to W2 at some point in your life. I remember when I first transitioned into entrepreneurship and I was learning about deductions and write-offs and like everything, all my friends would always say, oh, you can just buy this meal for us, right? Because it's a write-off, but it's still my money. I am the business, right? So even though I can deduct it, it's not like somebody's just free, right?
And I think the biggest assumption I see in agents is that, or anyone, is that most people just assume it's dollar for dollar, right?
Correct.
And not every tax deduction is dollar for dollar. So that's why some are more valuable and better than others, because you're getting 50 cents on the dollar for meals versus 100%, on other things. So that's what I think a lot of people miss the mark on too.
Absolutely. Yeah. So just because it's a write-off does not mean it's dollar for dollar, but we'll dive into that again here in more in a second. But as I can't remember who was, Gary, I believe you mentioned, a tax deduction is a business expense that lowers a person's or organization's tax liability by lowering their taxable income. So that's the true definition of it. Now, let's get into a couple of reasons why you'd want to use a tax deduction, and then why you actually do not or you may not want to use a tax deduction. Because too often do I meet realtors who just want to write off every single thing possible, and they don't want to pay a tax bill. So we do it. We find every deduction possible. We write everything off. However, that could come at a price that they don't even understand, which is why we'll get into that part right now. So 3 reasons to why you want to use a tax deduction. The very first one is the obvious reason, which we just talked about, which is to lower your taxable liability. The more deductions you find, the more expenses you have, the lower your take-home income is, the lower your tax bill will be. That's a great reason to use a tax deduction. Lower your taxable income, okay? That's an obvious one. The second one is to accurately calculate the difference between gross commissions and personal income. I'm going to hit this home real quick, and I might sound like a jerk saying this more the way I'm about to illustrate this, but I need you guys to understand that your numbers mean everything to you. Whether you like it or not, you guys are real estate agents. You start off in the business. Everyone does, just trying to make money, getting, selling homes and just getting as much as you can just to survive. But at some point, you're going to, by default, switch into the business owner mode without even knowing it. You guys are a business owner by default. Getting into real estate, you decided to be a business owner, even if you didn't plan on it. And as a business owner, you need to know your numbers. This is the number one. Sorry, go for it.
Nope, you go.
Okay, I was gonna say, this is the number one reason why I see real estate agents fail in the industry in the first few years. It's because they have no idea what their numbers are. They make a $10,000 commission. They spend that $10,000 commission on a new lifestyle, right? In their head, they're like, oh, I made 10 grand a month, so I should be living like this. But if you make $10,000 a month on a sale, that's not your money, right? Not all of it is. So a safe bet would be to save 20 to 25% of your income. That the moment a check hits your account, say 20, 25% for taxes, and you should be good to go. But once you get that income, you also spend money on listing photos. right? You also spent money on driving to the houses to show the client, right? To stop by meals and get those, to gas and fill up, right? Or like I said, the contractors to help, or the inspector, whatever it is you did, you had to spend money to make that money. So if you do not know how much money you spent at the end of the year to make the income you got, how are you supposed to double your business? So knowing your numbers is super important. So calculating deductions and using deductions, like using your business expenses and tracking that, you need to do that in order to grow your business. So that's another huge reason why you want to use a tax deduction, is because you want to track your income, track your expenses, track the deductions. Okay. So,
and for agents, I think the biggest mistake I see that they make is that they only put in what the check amount is, and they assume that that's all they have to record. And that's not true, because your check amount doesn't include your dollar or all your other deductions that you paid the broker first. And really you have to record and send in and show your actual full commission amount, because the 1099 amount or the check amount is not what your actual revenue was. And so when you and that's the switch cost of, like, QuickBooks is great. It'll automatically record that deposit amount, but that's not what your true income was. So you have to go in and do other things to show what the true gross revenue was. And most agents are not doing that.
correct. So we do that with all the clients that we bring on.
Yeah.
When we use QuickBooks Online, we actually get access to your guys' commission reports, because again, to her point, we want to see the gross money that came in. This helps agents be able to move around from brokerages to brokerages, and also give them leverage in order to negotiate their new splits or commissions with their current brokerage, right? If you're a beginner agent and you may have a crazy split, but it's only because you're a beginner. But if you've been in the industry for 10 years and you're still paying that same split that you were paying at the very beginning, you can go to your brokerage and be like, hey, I've been producing for you this much money every single year for the last decade. I would like to renegotiate my splits and like get that down a little bit so I can keep more of my money. Otherwise, I'm going to leave brokerages, right? So it gives you guys like negotiation power and stuff as well. Yeah. So let's dive into the next one for time's sake, because I could talk about this again for hours. I could just talk about this one slide for probably the entire hour. All right. To defer taxes or for potential savings. So another reason you want to use a deduction could be something like a 401k, IRA, SEP, simple retirement accounts. Financial advisors are great at pitching this because they say it lowers your taxable income for the current year, which is true. If you put money into your retirement account, you don't pay taxes on it at the moment, unless it's a tax-free account like a Roth or 529 or whole life plan, but we're not talking about those. More often than not, people will say, oh, you got till April 11th or April 15th to be able to max out your SEP or your simple. Well, yeah, you're not paying high taxes now because you're deferring that to later down the road. The problem is, at some point when you want to use that money, you're going to be paying taxes on it at the time you want to use it. And if you didn't know right now, 4 years ago when Trump was in office, we were actually at a 100-year low in taxes historically. So I don't know if you know this or not, but America seems to need more money than ever right now. And there's only 3 ways the government can get money from the American people. Number one is deferring benefits. So they could say, okay, instead of Social Security at 65, you get it at 70, or now you get it at 80, or now you get it at 90. The other way is to go to war, make the American dollar more powerful. And then the third way, which we're all familiar with, is they just raise taxes. If they raise more taxes, if they raise the taxes, that's how the American people can contribute to the government and spending and get all those potholes fixed, So just be careful when you're talking to a financial advisor, making sure, if you're using a retirement account for an actual retirement account, that's great. But if you're using it for potential savings, just know and do some tax planning and see if that makes sense for you at the moment, because you don't have access to the 59.5. And when you take that money out, you're still paying taxes on it based on the tax rate at the time. But that's a whole nother class. I think I have a whole nother presentation on that, on history of taxes, which is way more fun than it sounds actually. Okay, so 3 reasons why you may not want to use a tax deduction. And then we'll dive into the really fun stuff. It's all creativity and everything. But all right, 3 reasons why you may not want to use a tax deduction. Number 1, lending. You guys are all realtors here, right? How many people do I have in here? Like a few. Yeah, I see you guys down there. Oh, there you are. Hi, nice to scroll down a bit. All right. How many of you guys have talked to a business owner where they say, oh, I make, $200,000, $300,000 a year. I'd like to go get approved for this amount of money, this amount of home. And you show them all these homes in the price range because you think they make $300,000. You get excited, life's good. And then you say, hey, Mr. or Mrs. Business Owner, can I please see your tax return? and you see that they in fact don't make $300,000, they actually only take home $20,000 because they write everything off. Right? I'm sure if you haven't experienced that yet, I'm sure you're gonna at some point. Business owners will say they make a lot of money, and then you see their tax returns and they deducted everything, so they really make not that much on paper, even though their business is producing a lot. So if you do not use a tax deduction, that will help your lending power. Okay. So again, one reason not to do it is because you want to invest in one of the greatest assets of all time, which is real estate. So you may need to show higher income for a certain year in order to qualify. So don't use tax deductions to the fullest extent, so you can apply and use our favorite plan, which is the OPM plan, other people's money, which may be the banks, and you can leverage your taxes to be able to afford real estate. So that's another reason you do not, or one reason you do not want to use a tax deduction is for lending purposes, to show higher income. Next, I don't want to go into that too much because I know I will go down a rabbit hole for this one. Maximum protection. Okay, so another reason too. So again, you guys are all W-2 employees at some point in your life, I'm sure. You guys all had this really cool thing called benefits, where you guys would have life insurance paid for, disability insurance paid for, health insurance was coming out of your check, so you didn't know, but it was offered, at a better rate than what you're paying probably now. You had retirement accounts set up for you, like you had everything going for you. But now that you're transferred into a entrepreneurship role, you now have to come up with your own benefit package. So you got to go out and get your own retirement account, your own health insurance, your own life insurance, and your own disability insurance. However, guess what? The insurance companies base how much they'll protect you on. If you guessed income, you're correct. It's income. They will base what they protect you off your income. So once again, if you're a business owner showing that you make $250,000 a year, but your taxes say you only made $20,000 a year, what is a life insurance company and a disability insurance company going to protect you on? 20 grand a year. So if you're going to show high income one year to go buy a home, I would recommend killing two birds with one stone and reapplying for all your disability and life insurance, because then you can say, hey, I made this much money this year, and lock in your contracts for the lifetime. So, or the contract terms. So another reason you don't want to use tax deduction is so you can not only just get lending, but also maximum protection. Okay. And then avoid future tax increases, so I won't go over too much into it. But the main point of that is, if you have a, if you had like a really off year, maybe save some of your deductions for this year and carry them over to the next year. When you have a normal year, and or if you get like a massive big year one year, you got like a cute couple multi-million-dollar listings or something that's not normal, you may want to be able to use those deductions currently as opposed to later. But again, I can talk about that forever. So for time's sake, let's keep on going. All right, let's dive into some creative tax strategies. Before I do this, I'm going to grab another sip of water real quick. Can you guys drop in the chat how long you've been in real estate for, so I have an idea who I'm talking to a little more? You've been in the chat box down there. You've been in real estate for 1 year, 2 years, 10 years, 20 years.
You're going to get the gamut. Yeah.
Yeah, I actually don't know how to look at this stuff.
Dee Dee's been in for 1, Christina 2 years, who said 23, Christina Gill, no, Mickey's 24. That's right. Stacy's 3 years, Paul's 6 years. I almost am as much as Mickey. I've been in for 20 years. Reading wins. Tucker, you win. 48 years.
Damn.
Winner, chicken dinner.
All right, so majority of you guys are seasoned agents. Some people are beginner agents. So this is really crucial for everyone. Okay. Entity selection. These are the options you have when you join real estate. You can be a sole proprietor, a partnership, S Corp, C Corp, or the jack of all trades, the LLC. If you don't know what you are right now, you're probably a sole proprietor, because that's the one everyone is by default. Again, one more time, can you guys drop in the chat what you guys are? Are you LLC, S Corporation, partnership, sole proprietor, C Corp? And then Ashley, just read them off to me so I have an idea. I don't want to spend too much time on one if no one's no one's a partnership. I won't spend too much time on it. But if you guys
I got 2 LLCs, 1 S Corp. That's it so far.
Okay. Let's dive into a little more then.
LLC filing as S Corp, LLC. So LLC is going to be your most common for sure.
Beautiful. All right. Well, I won't spend too much on time why you guys should be an LLC. I'll just kind of hit it home for why you guys made that decision. So again, as a entrepreneur making money, if you didn't choose any of these at the beginning, you're by default a sole proprietorship. You could also be an LLC filing as a sole proprietorship. But the problem with a sole proprietorship is you have this really, really nasty tax. If you haven't heard about it yet, you're going to see it in the next 4 days when you're filing your taxes. You have this nasty tax called self-employment tax. Self-employment tax is 15.3% above your state income taxes, above your normal income taxes, and above anything else you're paying on this side to the government. Self-employment tax is dirty, 15.3%. To make that hit that home even more, let's say you made $150,000 gross commissions. That means you made $150,000 in sales. My dog is taking all of his toys out of his pen right now. You make $150,000 gross commissions. Okay. You had $50,000 of expenses. $50,000 of expenses means that you now take home $100,000 net income. Yay, congratulations. However, if you're a sole proprietor or an LLC filing as a sole proprietor, you have 15.3% tax on that $100,000 before anything else. So you're paying $15,300 on your $100,000 that you made as a business owner. Not including living expenses, not including state income tax, not including anything else you had to pay. $15,300 on $100,000 just going to the government just for being a business owner. So if you don't know yet, you're going to feel that pain here pretty shortly. That sucks. So how do we eliminate it? Well, you can choose to be one of the other corporations. Partnerships, I won't dive into too much again for time's sake. No one here mentioned partnerships. I don't need to run into that. C corporations are typically for like the big players like the like Pepsi, Coca-Cola, Fortune 500 companies. Like those are C corps more often than not, unless you're in the state of California, and then you're a C corp realtor, but that's a whole nother beast itself. And then the LLC is a jack of all trades because you can be an LLC forming it as a S corporation, and the S corp is the ultimate one that will save you a shit ton of money on taxes. But we'll dive into that in just a sec. So if you're not an LLC yet and you're a sole proprietor, because again, I can't really see chat, so I'm just going to glance over this real quick. If you're a sole proprietor, I would want you to highly recommend you getting an LLC today, right now, after this meeting. It's a takeaway you could do. An LLC, just get it. And here's why. There's 3 reasons why I want an LLC. The second you get licensed as a realtor. Number 1, the LLC in and of itself has no tax savings. The main purpose of an LLC is called a limited liability company. It puts a line of demarcation between your personal and your business assets and finances. If you go showing a home and you're on your 20th home that day and you're exhausted and you guys go get a margarita and then you end up getting back in the car and you get in an accident, that person will sue you not only on the business, but they'll sue your personal too if you do not have an LLC. If you have an LLC, they will only go after the LLC. They can't pierce into your personal assets. Vice versa, you're throwing a big party at your house. Somebody hurts himself on a trampoline. They sue you on the personal side. If you have an LLC, they cannot pierce into your LLC, business accounts or business assets. So number 1 is protection. In the state of Texas, it's only $300 to get your LLC. So I'd recommend if you don't have one, get one today for protection purposes only. Reason number 2 why people want to become an LLC. Organization. One of the number 1 reasons people fail audits is because they commingle accounts, which means you're having personal and business expenses coming out of the same account. If that's you, try and solve that today. How you can do that is you form an LLC and you apply for what's called an EIN number. An EIN number acts as a social security number for your business. You take that LLC and EIN number, you go to a bank account or a bank and you open up a business bank account. And that's where your new commissions and everything else come in, will go into that account. Any expenses will come out of that account. And you are now operating as a business owner. Okay. So highly recommend getting the LLC for number 1. organization, protection. Number 2, organization. Reason number 3 why you want to get an LLC today, if you haven't, is because once you guys all kick ass in the end of the year, you're like, wow, I made the most money I ever have made in my life. What did that one guy on that Zoom call say? Oh yeah, I should file as an S corporation. Wait, what was I supposed to do? Well, if you kicked ass all year like you're going to, and you do not get the LLC like I'm recommending today, you cannot do one of the greatest things that you could do as a business owner, which is called a retroactive or backdated S corp. You could do a backdated or retroactive S corp all the way back from the beginning of the year from when you filed your LLC. And that'll save you tons and tons of money. So I recommend, no matter what, if you don't have your LLC today, get it. So let's move on to the S corp people. Once you're an LLC, again, you can file as a sole proprietorship, or you can file as an S corporation, or whatever you want. The reason why you want to file as an S corporation is because you want to eliminate that self-employment tax as much as possible. Okay. Do I have a slide on this? Let me see. Nope. All right, we're gonna see it. S corporations allow you to split your taxable income up into 2 separate categories. The first one is called a reasonable salary. This is payroll for you guys. You actually will be getting a W-2 as a real estate agent from yourself. I know it sounds weird, but it's the way it is. So when you get a W-2 or you put yourself on salary, you basically will be paying self-employment tax or payroll taxes on that money. However, if you are a successful business, which you guys all will be, at the end of the year, you also have something that's left over, which is called profit. Profit, or otherwise distributions, does not have self-employment tax on it. So anything on the profit side, you're saving 15.3% of self-employment tax on. So I have a slide that I need to put in here because I just created it, I think, the other day, but I'm going to just follow along with me on this one scenario, okay? Because I'll show you how much I'll save you $7,000 right now if this is your situation. Let's say you're an LLC filing as a sole proprietor. You made $150,000 gross commissions income, right? Remember that gross revenue? That's how much money came into you in your business. You had $50,000 of expenses. So it costs you 50 grand to create $150,000. So your take home taxable income is $100,000. If you're a sole proprietor, you're paying $15,300 on that $100,000, which sucks. If you're an S corporation and you had the same scenario happen, you made $150,000 gross revenue, you wrote off $50,000, you have $100,000 take home. You can now split that $100,000 take home into 2 categories. Remember, the reasonable salary, which is your W-2, and then the profits, which are the profits and distribution of your company. Let's just split that in half for time's sake. Let's say $50,000 is your W-2. You're paying self-employment tax on that one, which is also hidden as payroll tax. And then you have another $50,000 that is considered the profits or distribution of the company. You made the same amount of money, but you filed as an S corp instead of a sole proprietor. In this situation, if you made the same amount of money and filed as an S corp, because you're saving 15.3% on half of the money, you take that $15,300 that you owed as a sole proprietor and you cut it in half. Now you only owe $7,650 as an S corporation. Same exact money that was made, but you're paying half the amount of taxes on it because you filed as an S corp. That is why the S corporation is so powerful. And that is also why you want to be an LLC, because you want the flexibility to be able to file as an S corp down the road, and you guys all kick ass this year. Okay. I have a whole presentation on all that too. Again, just more in depth, and I have drawings and everything we'll dive into, but I want to get into some of the fun stuff too, for time's sake. So again, I'm just going to segue a little bit into a shameless plug here. If you don't know yet, my goal, again, as we're going through this presentation, is to provide as much value to you guys as I possibly can. So at the end of this, you guys want to take advantage of that free 20-minute call and just talk to me about your situation to see if we're a good fit or how we can partner together. It's not a sales pitch when you give us a call, because that's my job that I'm doing right now, is to show you, listen, I know my stuff. I wrote a book on it. I'm up at 6 a.m. talking to you guys. This is the first time it's ever happened, right? I love this stuff all day. I'm passionate about it. I want to make sure you guys work so freaking hard for your money. I want to make sure you guys keep as much of it as possible. So shameless plug right there. All right, let's keep on going. For my escort people in the room, this is going to be super fun because this is where you're going to save a lot of money as well. If you're not an S corporation, here's the reason why you want to be an S corporation. Not only to save on self-employment taxes, but once you operate as an S corporation, you now not only limit or help limit your chances of being audited, but you also will have your seat at the table of other business owners, which allows you to play the tax game a little differently, which is what we love to do. Side note, every single creative tax strategy I'm about to go through right now is 100% legal, right? Is also black and white. We at Northwest Premier, when we first started our company in 2019, what we did is we invested during COVID times. We invested in having a CPA coach on our team. His name is Tyler McBroom. He is Tony Robbins' personal CPA. He works with CPA. He's a giant CPA firm that works with all those people, like the high net worth people. And we meet with them once a month. This guy goes over the strategies, new tax laws, new all stuff. He teaches us what's coming up and how to be creative, how to play in the black and white. So all these rules and all these creative tax strategies we show you, we talk to this guy once a month, so we know what we're doing. That's how we verify everything. So yeah, listen up. Here we go. So now you're an S corporation. You got your seat at the table. Great. You can play a game called the Augusta Rule. How many of you guys, actually, before I dive into this, how many of you guys are using the home office deduction? Put it in the chat. How many of you guys are using the home office deduction? Or raise your hand or something. I can't see it. Let's see. Everyone? Home office, home office?
Yeah, I would guess every agent. Okay, Christina, you got to figure that out.
Oh, damn, more people showed up? Heck yeah. All right.
Yeah.
Let's get the party going. I still love that name, Freddie Ross, dude. I hope, even if we don't work together, I hope him and I just be friends.
I know, right?
Okay. So if you guys are using the home office deduction, after you hear this, you're going to not want to do that anymore.
Oh,
The
wow.
Augusta Rule states, it's section 288 in the tax code. And it states that every single person in America who owns their own primary residence can rent out your primary residence for up to 14 days a year.
Yeah.
Ever income that is collected within those 14 days, you do not pay any taxes on them. Don't believe me? Check my work right here. Section 280A. How it came about is a long, long time ago. In Augusta, Georgia, every year in Augusta, Georgia, they host the Masters tournament, which is like the Super Bowl of golf.
That's so funny. I did not know this.
So the Super Bowl golf happens in Augusta, Georgia. All these people were renting out their houses in Augusta because they're all really nice homes, right? They're renting out these homes to the PGA players, to the sponsors, the businesses, the players' family, all this stuff. They're just renting out their homes and making a killing, right?
Yeah, and this was far before Airbnb and VRBO. Like, this is way, way back, right?
Correct. Yeah. So what happened was they were renting out their homes and making a lot of money. You want to play with the toy? You can go over here. Chirp it, chirp it. They were renting out their homes and making a lot of money, right? At the end of the year, the IRS said, hey, you guys, congratulations on making all your money as landlords. Can you please give us some of the money, the taxes? Lo and behold, all these people got together and decided to go to the IRS and say, hey, can we not pay those taxes? Because technically, by your own definition, we don't fit the definition of a landlord. The IRS is like, well, damn. And they're like, all right, that's fair. So they made the rule called the Augusta Rule, which is, again, Section 288, which again states that any person in America can rent out their primary residence for up to 14 days a year, no cap on the income that comes in, and whatever you get, claim it, and no taxes. So how does this benefit you guys? Well, if you're an S corporation, you should technically be having a shareholder meeting once a month with you, yourself, and whatever personalities came with you that month. It sounds weird, but you need to be having a shareholder meeting once a month. So what we do is we formalize an agreement between your LLC and your S corporation and your primary residence. Every single month, your business is going to be renting out your primary residence for one of two ways. Either one, you go off comps. You call around any business office around town and you say, hey, I'd like to rent out your office for the day. Most of them would say $1,000. So that's what we choose. The other way to do it, the safe way to do it, is you knock 3 zeros off the value of your home. So if you have a $700,000 house, you can deduct $700 a month. If you have a $1.7 million house, you can deduct $1,700 a month. That's a safe bet. Okay, so whichever one's better, $1,000 or the 3 zeros off your home. So every single month, you're now moving money from your business account, putting it into your personal account because you're renting out your primary residence to your business. This is $12,000 a year that you can get out of your business and put it into your personal and have no taxes on that money. So if you're an S corporation, you're probably going to be saving around $3,000 to $4,000 in taxes just by doing this one strategy. So if you haven't learned yet, I am a profit center for you guys. I'll be making you money more than you're paying me every single year by doing stuff like this, because we are just at the tip of the iceberg right now. Okay. Also, this is pretty damn good for 6 a.m. I'm not gonna lie. I'm pretty impressed with myself. It's like I've done it a couple times. So yeah, so you guys, again, if you're a non-S corporation, I highly recommend looking into that. One takeaway I want to give you guys too before we dive into the next stuff is the triggering number for being an S corp is if you're making $60,000 to $70,000 net income.
Oh, I was wrong.
60
Oh,
to
sorry.
70, you're good. $60,000 to $70,000 net income. That is when you want to start reaching out to us and having the conversation of S corporations. Okay. The reason why is because as an S corp, you're now filing business tax returns and personal tax returns. So you're paying your CPA to file 2 different types of tax returns. You have one set, which is due on March 15th, and you have the other set, which is due April 15th. As an S corporation, you're also supposed to be having what's called payroll. Payroll is not moving money from the business account to the personal account. That's called an owner's distribution. Payroll is an actual payroll, like from a company like ADP or Paychex or one of those bigger names. Like payroll is actually being run where you have federal wages coming out of or federal taxes coming out of your paychecks, and you actually formalize and get a W-2 at the end of the year. So that costs you a little bit of money to do that each month as well. So you have payroll, you have 2 sets of taxes, and you also need bookkeepers. Because if you're playing the game like this, you want to make sure you're tracking your income through and through, you know exactly what's going in, what's going out. And if you get audited, you want us to be able to come forward and be like, hey, guess what? We got this. Don't worry about it. Take a back seat. We've had 3 clients go through audits in the last few years. It's just picked out at random. And what am I trying to say? Flown through them with flying colors. What's the saying? The 6 a.m. is catching up to me. We breezed through them. They basically came in, took a look, and they left. Like, we're that good at this stuff. So S corporations make sense at $60,000 to $70,000. So if you're at that $60,000 to $70,000 net income mark, highly recommend talking to us so we can get you as filed as an S corporation. And then your CPA can knock that out, and we can save you a ton of money by doing stuff like the Augusta rule. Okay. Cool beans. Next. Okay, so these are the other things we can go over. We have 10, 12 minutes, 11 minutes left. I'm going to go back to bed for a minute afterwards. I want to make sure I'm very cognizant of your guys' time, as well as making sure you guys take away as much information as possible can. I want to make this valuable. So I'm going to open it up for Q&A here. The other strategies we can talk about are employing your family. So if anybody on here has kids under 18 and they work in your business, I don't care if they're stamp licking for you or they're janitors cleaning up your mess, right? Or they come to showings with you. If your kids work in your business at 18 or who are under 18, we can do what's called income shifting and save you a lot of money that way too. If your spouse or significant other is working in your business and you guys travel a lot, it might make sense to hire them. That way you can deduct their plane tickets and everything as well. Okay. Other thing is, if let's say, damn, Mike, I wish I would have met you before my kids were 18 and went to college. Now I'm helping them out in college. Well, guess what? I can show you. We have a whole nother class that's called How to Leverage Real Estate to Pay for your kids' college income tax-free. Vehicles is a big one I have all the time that comes up. People always want to know lease or buy or 6,000 pound rule, that kind of stuff. Traveling, vacations, anytime, again, communication is key for us. So any single time one of you guys go on vacation, you are no longer going on vacations. You're going on research and development to figure out what next investment property you want. So I'll help show you how to deduct every vacation you ever go on your rest of your life. So I'm going to open it up to questions.
So we've got one already.
Perfect.
Christina's asking, what is the maximum amount you can deduct for your income shifting?
$14,600 this year. Any kid who's under 18, you can pay them up to $14,600 for 2024.
And that
There's-
changes every year, right? Also like the mileage deduction.
Correct.
Yeah.
So if you're gonna hire your kids, there's two ways to do it. So call us and let's schedule that appointment up, because there's the easy way is if you're an S corp, you just throw them on payroll, but you're also paying half of the self-employment tax on that, so it's not saving you as much money as possible, as much money as you can. The more complicated ways, you basically open up another LLC that you own and you hire your kids as contractors. So you basically get to deduct and send yourself a 1099 to your new company, and then that company will pay them. And that's how you save all the self-employment taxes.
That's interesting. So you can't pay them as a contractor under your existing one?
No, you want to open up an LLC, pay them under the LLC, operate that LLC as a not zero profit, basically, right?
Okay.
You contract that out and then you pay the kids that way.
Hmm.
I can't remember. I gotta remember why you have to do it that way as opposed to just paying them as contractors, but I'll come up with that later. I think I think that, like I said, my brain's starting to catch up and be like, so we're not at the gym yet. Why are we? So
You messed up the routine today. Yeah.
Yeah,
All right.
that's
Anybody
okay.
else want to come off mute and ask a question or throw it in the chat?
yeah. Also, if not, like I said, this QR code will take you to where you can buy our book. Number one.
I was going to ask you to talk about that.
Yep. So our book is called The Financial Blueprint for Real Estate Agents. Yep. Mickey's got it right there. Mickey's bought it. It literally goes through it. I don't understand how anybody can buy that book and not be successful in the business, because it shows you how to be an LLC, an S corporation. It'll show you tax strategies. It talks about like getting your team together, like a financial advisor, a C corporation, S corporation, all the things. We talk about in depth about the tax strategies we do. I mean, it gives you reasons why, more reasons why your real estate agent is such an impact in the world. It's just, I mean, I know it's my own book, but damn, it's pretty good. What happened was we actually hired a ghostwriter to help us write it. But the problem is, like, nobody knows what's in our brain, which is a good thing, probably. So we actually had to scrap it halfway through and actually write it ourselves. So everything in there is 100% us. You'll hear our voices in there. It took us a year to write this thing. We wanted to make it fun, entertaining read. So I would highly recommend getting that. You can get it on Amazon for like $20 or $30 or something like that. But that thing will save you so much money. It's crazy. So you can take this QR code, buy our book, and or set up a free 20-minute consultation where we can go over anything you want to talk about, employing your kids, the deductions, S corporations, whatever. It's up to you. If you do scan this QR code and you end up hiring us, we do knock off $100 on our onboarding fee. So that's from this presentation. Another way to get the full $250 onboarding fee waived is if you, number one, scan this, schedule a meeting, but also leave a Google review for us just based on this presentation. That helps a lot. So as we grow, the way we get into 50 different states is by we're doing these kind of presentations for brokerages all across the country. So when they go to our Google reviews and they see, oh, these guys all really like this class, it's worth us bringing them in. That helps a lot as well. So we'll waive $250 off on our onboarding fee if you give us a 5-star Google review just on the presentation. We have 102 5 stars right now, so we're doing pretty well there. But I want to make sure we're constantly growing.
So I put the link in the chat for everybody too. I think somebody asked for that. I can't see who it was. Stacy. So that's in there. And then Dee Dee asked, would you please repeat how you should form an additional LLC to pay kids as contractors?
Cool. Let's do that. Yeah. So you want to form another LLC. It can just be, I'll just give you my example, how I do it with my kid. So my kid's 7 years old. He's doing, sports, soccer, all that stuff. And I pay for our father-son vacation every year out of this account. So I opened up an LLC. It's called Ross Holdings. That's just our family name. So it's just a simple LLC, Ross Holdings Company. Every month I bill Northwest Premier from Ross Holdings. Northwest Premier will then move money, remember up to $14,600 a year. So I'll move money from Northwest Premier, pay the contractor Ross Holdings, which is 100% deduction for us. Ross Holdings now takes that money and then gives it to their contractor, which is my kid. And then it deposits it into his bank account. Because he's under 18, I have to be the co-signer on his bank account. So it's my money too. So I have access to it. So the LLC is a contractor, so it's 100% deduction on your business side. I claim it on my taxes, but I'm making no income on it because my money went directly to my kid because he's my contractor, he's my employee, right? So that's how you're saving 100% deduct or 100% of that money as opposed to just putting them on payroll. So your LLC will be operating in net zero. Your kid makes all the money. There's no taxes for the kid because they're making only $14,600 a year. So free and clear on that one. The simple way a lot of people like to do is just put their kids on payroll and call it a day. They call their payroll company and just do that, pay them $1,000 a month, save them money. That's simple.
Yeah. So Stacy, in that instance, you're not paying payroll taxes for them because it's 100% pass through. So you're giving them the gross 14,000, which is zero liability, zero income for that additional LLC. The other way to do it is pay them through the S Corp as an employee, but then
Correct.
you would be paying payroll taxes. So it would cost you what, 15, 16,000 total with the additional employer payroll taxes. And then they wouldn't get the full 14 because the kid would be, well, actually it's less than the kid wouldn't be taxed, would they? Because payroll taxes, yeah.
No, so you're basically just paying 7.5% of the 14,000.
In the payroll tax, yeah.
That's it. So you still saving money, but just not as much. But it's also easier. That's why a lot of people do it. They just make one phone call and it's done. Yes. And then again, another reason why bookkeepers are so important is because, like you mentioned at the beginning, each category is not 100% deductible all the time. So for an example, if I did a meeting with any of you guys out after this, and even though we're in Washington State, let's just say we're together and we went out to a restaurant, that would be a 50% deductible meal because we went to a restaurant, we went out as an external, we had a meeting over lunch, that's 50% deductible. Basically the IRS is saying I get to deduct your portion, I can't deduct my own. If I came to your guys' office and I did the presentation, this same presentation, but I bought, 6 a.m. I bought donuts and coffee and I brought it to you guys, that would be what's called an internal meal because I'm working through the meal I purchased. Internal meals are 100% deductible. So external meals are 50%, internal are like if I have to, again, if we're running late and we need to go grab some Uber Eats to come to the office and eat with it while we go through our talks, like that would be 100% deductible. Right. So there's all like a bookkeeper, we pay for ourselves time and time again. Like I would not let you guys hire us unless we're going to make you money. We should be a profit center for you guys every single time. So, if I can't save you money, just don't. I wouldn't let you hire us. I want to keep that 102 5-star reviews. So I'm gonna do everything I can to make sure we're a profit center for you guys. Yes. Any other questions you guys have? Otherwise, we got 3 more minutes, so we can kind of just we can wrap it up a little bit early if you like. I'll probably just stay up and go to the gym now.
Oh, no, this was awesome. I do all these things, but I don't want to anymore. I think I said that at the beginning. So I know Kevin and Stacy jumped on because I sent them the link and I was like, hey, this is who you need because they've been asking me for years and I just can't get my life together. So I'm like happy to send the referrals your way for sure.
Yeah,
so.
We appreciate it. I mean, like I said, we're staffed up. We're staffed up for this, right? So just a quick little backstory on us again. Like we were originally doing financial consulting, but we were so tired of like having to teach these CPAs and bookkeepers our strategies. And then also we didn't have any way to double check that they were working. So we decided during 2020 to bring it in-house. So we now have control of the whole system. And our goal, a little behind the scenes, is by the end of 2025 or beginning of 2025, our goal is to actually start filing taxes in-house as well. So right now we're just strictly bookkeepers, and we do partner with some badass CPAs who know our tax strategies, but we're going to get to a point now in 2025 where we're going to start filing in-house. So we want to control the whole system. We want to make sure that we are, not only just talking the talk, but we walk the walk as well. So that's
you're recommending QuickBooks Online, right?
QuickBooks Online is the software. Yep, that's all of our clients have that. So the difference between QuickBooks Online and then just like in hiring us is the fact that QuickBooks will just automatically calculate and categorize things for you. It doesn't do the strategy piece, and which is why people hire us. So not only do you get bookkeeping throughout every single month, but you can also hire us as your consultants as well. So every quarter we'll go over our profit and loss statements with you, make sure you're on track for what you want to hit. talk to you more business owner to business owner. My business partner and I own the company. We don't do any of the bookkeeping itself. That's what our employees are for, and that's what they do. But the reason why people hire us is because you get the knowledge of my business partner and I on like how to actually run a business, and we love growing businesses. We love scaling them. So yeah.
2 more questions real quick. Christina asked, do you have to list what your child does for work? Like, do you have to report anything? I don't.
Correct. Yeah. So you need to actually create a job description for them, and they actually have to be doing something. So if you do get audited, you want to prove that, hey, I hired them for X, Y, and Z, and here's proof that I hired them, and that's what they're doing. So for one example, we have our kid, my kid's, I pay him for marketing, but there's plenty of pictures on social media where he's in my sweatshirt, in our company sweatshirt promoting us. I have another real estate agent who their kid is a model for their company. And there's so many pictures of their kid, like literally holding a sign that says, my mom needs more listings. And it's a really cute kid. So it just works out. So yeah, you got to give them an actual job description, and then you have to formalize their bank account. And you have to pay them each and every single month. Where people get in trouble is they'll just dump $14,600 one time at the end of the year, and the IRS knows exactly what you're doing. So no employee will say, I'll work for you all year and just pay me once a year. They want to see income going into their account every single month.
Last one. Dee Dee's asking, do you serve as registered agents on entities?
Yes.
Okay. Cool.
Yeah, we can work in any state. We can work with brokers or real estate agents. I think Texas we actually had before Texas, just the TREC, you guys' real estate commissions or whatever people, before they allowed anyone to become an LLC, we actually found a way to have any realtor, whether they be a real estate agent or a broker, we found a way to have them be an S corporation, which saved a lot of people money. We had a whole article published out there in the Texas Today news or whatever it was. But yeah,
that's awesome. So you're saying you guys found a way for agents who are not a broker in the state of Texas to get paid to their S corp by their broker?
Correct. Yeah, correct.
Wow, that's huge.
Yeah. So they basically,
that's massive.
Long story short, the loophole was basically it's just one extra step. You get paid to your Social Security, your personal bank account, and then you take that money and move it to the LLC, and then we do the work out of the LLC itself.
Oh, so you're washing it from the Social Security number and then putting it into the LLC.
Correct. I wouldn't use the term washing it because you're recording this call. So
sorry.
we're doing everything legal. You're just you're creating your income.
Yeah, you're just zero basing it.
Yeah, scrub the call. But yeah, so yeah, that's basically the workaround of it is basically you set an LLC and you just have the money you collect, you got to move to your LLC, and that's where we do all the work from and make you an S corp.
Gotcha.
Yeah. Again, it's just the IRS wants to see everything happening like throughout the year. You just don't want to do it once a year. You basically get one oopsie daisy kind of thing where you can do the backdated S corp, but then you got to play the game correctly.
Awesome. Well, thank you so much. I know that this was rough getting up early, so appreciate you. I want to ask you, is it lease or buy on the vehicles? Because Peggy argues with me on this all the time, and she just leased another car, and I love being able to tell her that she shouldn't have done that, but I could be wrong.
Well, you're not wrong. It's a situational base, but I mean, I love leasing cars too. And the reason I like to lease cars is because if you lease your car, you can deduct your payment every single month, and then they take care of all the rest of it, and you can still deduct your gas. So the only thing you lose is the depreciation on the vehicle.
Depreciation, yeah.
Yeah. So that now, because you don't own the vehicle, the dealership can depreciate it, but you can't.
Mm-hmm.
But you still get full deduction. You can still get 100% deduction of your lease payment every single month, and your insurance and your gas.
Mm-hmm.
So I recommend doing lease. The reason why people fail or get screwed up in leases a lot is because they go over the mileage that's allotted to them. So if you don't know how to leverage the game of leasing by like constantly trading cars in and out, then I wouldn't do it. But I think leasing is the way to go personally if you're a business owner.
All right, fair enough.
But if you own your own car and you have an option, if you bought a new car, I would always choose expenses over mileage. And the reason is because in expenses, you can deduct your car washes, your car insurance, your new tires. Anytime you go get a car detail, you can get you can deduct that car. You can buy an air freshener for your car, you can deduct that. Like I would always choose expenses over mileage if you're a real estate agent and you own a car.
Cool. Awesome. Thank you so much, Mike. We appreciate it. Hopefully you get some good referrals from this, and we'd love to have you back.
Yeah, like I said, I got probably about 12 other classes that I can do stuff. There's topics of 3 radical ways to reduce your taxes, where I really hit home on the S corp, more graphics and stuff. And then I talk about the history of taxes. We have one for how to pay for your kids' college leveraging real estate. We have one that's called distinguishing sales language real estate agents, because we've worked with a million of them, so we know how to really help you guys separate yourselves on a sales aspect of it. We have 3 tax hacks all real estate investors need to know. So it's a really good one for real estate investors. I mean, we got a lot. I think my brain's starting to shut down a little bit, but yeah, we got a ton. We got a ton we could go over. So yeah, please have me back, and let's do this again sometime at 9 a.m. Pacific Standard Time.
Yeah, awesome. Thanks, guys. We'll see y'all next week. We appreciate it.
Bye.